Hi, I'm Adrian Helfert, Westwood's Director of Multi-Asset. If you decided to go off-grid for the last 18 hours or watch reruns of Star Trek, you didn't miss the result. We don't have it yet for the presidential election or the Senate races. Right now, where we stand is, looking forward, there were always four potential outcomes. The potential for a red wave or a blue wave, or those results in between where the Senate changed hands but the presidency didn't, or it did. As that stands, of course, thinking about what the odds are, we can only really look to what the polls are telling us, what the markets are telling us. As it stands now, it does look like the Senate is going to remain firmly in the GOP hands, the House will remain Democratic, the presidency race really is up for grabs, and discounting that for litigation, other things that will change, we're looking at a result that may come soon, but not immediately. We know the implications that has if we see a President Trump re-election alongside what we expect in Congress. That likely means strong fiscal stimulus. It means implications to the Affordable Care Act. It does mean continual China trade war with tariffs and the implications that has. If we see a former Vice President Biden take a win alongside what we expect in Congress, that likely means less fiscal support, offset by an unlikely higher tax rate on a corporate tax rate and pushback on individual tax rates. So there's a bit of a balance there. The markets this morning are generally expecting the latter scenario of a Biden presidency with Congress remaining as it was before the elections. The beneficiaries of that are at least uncertainty comes down. We're seeing the VIX, or the fear index, that's come down sharply. So there's an expected result that's coming forth by the markets. Technology is appreciating significantly. I think the biggest impact there is likely due to dropping interest rates, helping discount longer-term cash flows at a better rate, as well as lower growth rates that pushes more equity flows into growth from value. As we look at this, interest rates are dropping in part because there's less fiscal responsibility. Maybe as you squeeze the balloon, that pushes more on the central bank to provide more stimulus. That keeps interest rates low. And the prospect for lower growth longer term. Nominal interest rates generally are your proxy for growth. That's where we're seeing that come out now with 10-year interest rates dropping significantly and the 2-10 interest rate curve dropping significantly. COVID is certainly on the ballot, with one presidency looking more as the economy as a preference and the other presidency accepting more of a lockdown, impacting the economy. If we go that the way that markets are appreciating right now, likelihood is that we're going to see more of a lockdown in the economy, another reason that interest rates are dropping. While less uncertainty is good from a market perspective, key fundamental questions remain, and the current path looks like one of short and medium term economic impact, negatively. There are fundamental questions in key sectors of technology, energy, financials, healthcare, all of which are still on the ballot and remaining unanswered. As we see answers and an outcome to the election, we look forward to communicating with you further and giving you good ideas and insight to where we see opportunity. Thank you for your time. Happy trading.